Welcome to Educare. So our today's topic is relief for individual, and with the help of these summary notes and test understanding, we will consider this topic. So first we are considering about non-business asset reliefs. So these are private residence relief and letting relief. So first, private residence relief. It is provided on the disposed of individual private residence, means dwelling house, or which has at some time their only or main residence. Only or main residence. Remember that if a person has only one house, dwelling house, then it is said to be his main residence. And if he has more than one house, then he has to inform the HMRC to which house to be considered his main residence. Now, if period of occupation is equal to period of ownership, if period of occupation is equal to period of ownership, gain is exempt. And if the period of occupation is less than period of ownership, gain is calculated and reduced by PRR, reduced by private residence relief. So question is how to calculate PRR. It is said to be period of occupation divided by period of ownership multiplied by the gain. Period of occupation divided by period of ownership multiplied by gain. So what is mean by period of occupation? Period of occupation is said to be actual occupation, means that person has actually occupied the house, plus deemed occupation, means that is considered to be occupied period. Now what things are included in the deemed occupation? It is last 9 months of ownership in any case, last 9 months of ownership in any case. Second, up to 3 years of absence for any reasons. For any reason, if a person is absent, has not occupied his house, then it is considered to be deemed occupied period. Third, any period spent living overseas due to employment. He has remained overseas due to employment. And up to 4 years of absence as a result of working elsewhere in UK. He is working in UK but elsewhere in any other city or in any other place due to employment and self-employment. But the most important thing is that these 2, 3, 4 points should be preceded and followed by actual occupation. यानी इनसे पहले और इनके बाद उस पर्सन ने एक्चुअल ऑक्यूपाई किया हो घर, तभी ये पीरियड डीम्ड ऑक्यूपाई पीरियड कंसिडर किए जाएंगे. So on 1st May 1995, Kareem purchased a house in Southampton for 25,000. He occupied the house as follows and lived in rental property, and then Kareem remained in the rental property in Newcastle until he sold his Southampton house on 1st February 2023 for 95,000. Calculate the chargeable gain after relief, if any, arising on the disposal of house on 1st February 23. To solve this question, first we are considering the working, that is total exempt and chargeable. This is our working. So first he has lived in house for 14 months. So this is said to be actual occupation. (14 months) actual occupation, and this is exempt. Second, lived in a rental property in Southampton 27 months. So this is said to be deemed occupation due to any reason. Remember second point, that due to any reason, if he up to 3 years of absence for any reason he is absent from his house, he is not occupying his house, this is the period of 36 months. So out of this we are considering now 27 months, right? Then employed overseas, deemed occupied period employed overseas. So this is the third reason. Any period spent living overseas due to employment, so it is a period of 12 months. So it is also said to be exempt period. And then there is a live with relatives. Lived with relatives is again deemed occupation period for any reason. Remember, for any reason we have 36 months period. 3 years means 36 months period. So out of that we have considered 27 yet. So remaining 4 months are also considered there. Now consider that this is again lived in house, means actual occupation. If it is actual occupation, that is why it should be exempt. But apart from this, you have to consider that after these 3 deemed period, if it is actual occupation period, then these are considered to be exempt, right? If it is not any actual period, means after this 4 months period he has sold the house, then we will not consider these 3 periods. So these 3 periods are only considered when after deemed occupied period there is a actual occupation, right? And then after this, lived in a rental property in Newcastle. So this is a lived in rental period is 115 months. But remember that what is after this rental property, living in rental property. Kareem remained in rental property in Newcastle until he sold his Southampton house on 1st February 2023. So after that he has sold his house. So out of this 115 period, 115 months, 9 months is always said to be deemed occupied period in accordance with first point, that last 9 months of ownership is always deemed occupied period. So it is considered as deemed occupied period. Remaining 106 months are considered to be your chargeable period, because after this period there is no actual occupation, so other deemed occupied reason will not be considered, So it is total period of 333. 227 is the period that is exempt, and remaining 106 is chargeable. So first we have to calculate the PRR, that is first of all period of occupation, that is 227 months, our 333 ownership period multiplied by gain. So first we have to calculate here gain. It is a sale proceed of 95,000 as mentioned in the last lines there, and actual purchase cost is 25,000. So cost is 25,000. So it shows a gain of 70,000. So we have to deduct the PRR relief. So PRR relief, here we have to consider 70,000 is the gain, occupied period, ownership period multiplied by 70,000. So it will be 227 divided by 333 multiplied by 70,000. So it is 47,717. 47,717 is a gain or relief, 718 in fact. So after deducting this PRR, 718, we have a chargeable gain of 22,282, right? Now next question, Andrea bought a house on 1st January 2001 and sold it on 30th September, making a gain of 1,89,000. So here we have been given the gain. So it's the detail of his period occupied. Andrea made no other disposal in the tax year 22-23 and had taxable income of 30,700 taxable income. Calculate Andrea's capital gain tax liability for the tax year 22-23, assuming all available reliefs are claimed. So again we have to compute this. This is total exempt chargeable. So first lived in a house, actual occupation, so exempt. Then employed overseas for 78 months. For 78 months. And what is the rule about employed overseas? It is any period spent living overseas due to employment. Any period. So all the period is said to be exempt period. Deemed occupation due to employment, right? Then there is a period of 66 months travel the world. Travel the world doesn't mean that due to employment. Travel the world can be considered as a deemed occupied period of 36 months for any reason, because in the second point we have been given that for any reason, if he has not been in his occupied place or house, this can be considered his deemed occupied period. So out of this, 36 months are said to be deemed occupied and remaining 30 is said to be chargeable. Again, because we have been allowed a period of 3 years for any reason to be considered as period of occupation. Now lived in a house 93, so it is actual occupation, and if it is actual occupation, so it will be exempt. So now you have to total the period. This is 102, 162, 168 and 261, and this is 231 and this is 30. So how to calculate the gain? First, gain has been given to you, 1,89,000. This is the gain mentioned to you, and you have to calculate the PRR. And how to calculate PRR? It is period of occupation, which is in this case 231, period of ownership 261 multiplied by gain 1,89,000. So it is a relief of 231 divided by 261 multiplied by gain 1,89,000. So it is 1,67,276. 1,67,276. This is the gain on which PRR relief is to be claimed. So it is 724 and 1 and 2. 21,724 is the chargeable gain now, right? Now it is considered that if the residence is used for business purpose wholly or partly, this part loses PRR and become taxable, right? If 1 out of 5 room has been used for business purpose, then on this one room the PRR relief will not be considered and it is considered to be chargeable period. Like on 30th June 2022, Alex sold his house for 1,25,000, resulting a gain of 70,000. House had been purchased in July 2008 and one of the 5 room had always been used for business purpose. Calculate the chargeable gain after relief arising on the disposal of house. So if it is a gain of total 70,000, out of this 1/5 of gain is become immediately chargeable because it is used for business purpose. It won't qualify for the PRR relief. So 1/5 of 70,000 is deducted from this, and remaining amount of 56,000 is said to be PRR relief. You can present it in this way that 56,000 there is a PRR relief because 1/5 house has been used for business purpose. So this 1/5 part means 14,000 is chargeable. Now it is about letting relief. When main residence is let out for residential purpose, owner has lodger, but remember that if owner has lodger who lives as a member, sharing accommodation, taking meal, then PRR relief is available, not the letting relief. So letting relief is only available when main residence is let out for residential purpose, but the condition you need to consider, if the lodger, if the other person who is living, who is paying rent, who is living as a member, sharing accommodation, taking meal, then PRR relief is applied, not letting relief. On buy to let property, letting relief is not available. Means those property which are purchased with an intention to let out, there is no letting relief available on them. Letting relief is said to be lower of these three amounts: 40,000 PRR, that is calculated in accordance with PRR rule, and gain attributable to letting period, right? So out of these three, we have to consider whichever is less is letting relief, and the gain attributable to letting period is calculated in the same way as we have calculated the PRR. Means letting period divided by period of ownership multiplied by gain. Letting period divided by period of ownership multiplied by gain. So in this question, Nicholas bought a house in Luton on 1st June 96. He occupied the house as follows: lived in house 12 months, traveled the world 84 months, and lived in house 217. Now important point, Nicholas rented out 1/4 of his house in the final period of occupation. 1/4 of house in this period of occupation, final period of occupation. The tenant did not share any living space, means with Nicholas, so PRR letting relief is available. He sold the house on 1st July, realizing a chargeable gain of 2,09,730. Calculate the chargeable gain after relief arising on the sale of the house. So we have to consider both the relief, means we have to consider the PRR relief as well as letting relief. So now we have to consider in the same way total, exempt, chargeable. So first it is 12-month actual occupation. So actual occupation is exempt, right? Then travel the world 84 months. Out of this 84 months, 36 months is available as exempt for any other reason, and 48 months are chargeable. Then lived in house 217, and here it is important condition, Nicholas rented out 1/4 of the house in the final period. Remember how to consider this. First it is the period of 217 months in total. Out of this, you know that last 9 months are always deemed occupied period, so it is last 9 months. So out of 217, if 9 months are said to be your deemed occupied period, remaining are 208 months. Remaining months are 208, and out of these 208 months, we have to consider 1/4 of the period has been let out. 1/4 of the house has been in fact let out, but it is considered in terms of period. So 208 into 1/4 will give you 52 months. These 52 months are said to be your chargeable period, and remaining 156, 208 minus 52, 3/4 period is considered to be exempt period, right? Remember that as it is actual occupation, but 1/4 of the house has been let out, so we have converted that portion of house that has been let out in terms of months. That the period is total 208. If we have let out 1/4 of the house, it means we have let out 1/4 of the period of, considered to be 1/4 of the period. So that is why it has been calculated. So the total period is here 48, 57 and 213. 100 is chargeable and total is 313. So first we have to calculate the period that is said to be PRR. So first we have to calculate PRR relief. It is period of occupation divided by total period multiplied by gain, and gain is calculated as 213 divided by 313 multiplied by amount of gain 209,730. This is 1,47,2,724. This is PRR relief. In the same way, we have to calculate letting relief. Letting relief for this period of letting period is 52 out of 313. So it is multiplied by, no, it is 52 divided by 313 multiplied by 209730. So it is 34,843. 34,843. Remember that it has to be compared with PRR and 40,000, and out of these three figures, whichever is less is said to be your letting relief. Three things we have to consider for letting relief. It is actual letting relief, 40,000, and PRR. Whichever is less is said to be your letting relief. So in this case, 34,000 is the deduct amount. So what we have to consider, out of gain of 2,09,000, out of gain of 2,09,730, you have to deduct the personal private residence relief as well as letting relief, and remaining is said to be your chargeable gain. So it is 209,730 minus 34, and this is 32,163 your chargeable gain, right? Now next question is, on 31st August 2022, Pooja sold her house realizing a gain of 50,600. Pooja has bought this house on 1st September 2017 and occupied the house as her main residence for the whole period of ownership, right? For the whole period of ownership. From 1st September 21, Pooja rented a room in the house out to a tenant who was free to use any part of the house and who took meals with Pooja. So calculate chargeable gain after relief arising on the disposal of house. As the tenant is sharing the place, taking the meal with the owner, then it is qualified for the PRR relief. And as far as PRR relief is concerned, so if period of occupation is equal to period of ownership, then it is said to be 100% gain is said to be exempt. So whole exempt gain of 50,600 will be considered exempt. Again, understand this, that if a tenant is taking meal, sharing accommodation with the owner, then there is no letting relief, then there is a PRR relief. And for PRR relief, we have to consider the period of occupation and period of ownership. And here the period of occupation and period of ownership is same, because occupied the main house period of ownership for the whole of the period of ownership. So that is why whole amount calculated will be exempt from gain.